Okay. Alright. Gone live now. So, that's the background of what was going on with my life before it. So, let's focus on the trades. So, right now we've got a flag pattern on this Bitcoin. A flag pattern here is the flag pole. And then you had the descending channel. And it broke out of the trend back into the cloud. Literally every trade I do is based on cloud resistance or support. So far what I've found with Bitcoin is any red cloud, we go through it. Any green cloud, we crash through it. So learning those within the ranges help. So the trade that we're breaking down is this trade that we did this morning. So let's scroll this all the way back. And let's zoom this baby in. So here's this trade. Call this a King Kong trade. Now, the reason why it's a King Kong trade is this is an oversold short. So, as it came down, here's a double bottom, and it started to come back up. Now, we were going to buy at the break of 8,000 to our position. And the moment it broke 8,000, we were in. So right here. The reason for this is very simple. If you go back here, this is $7,991. What that means that anyone who was short couldn't have been short any higher than $7,991 because that was the previous high. So once it goes over that, they're underwater. And the reason why we didn't buy till it went over 8,000 because we wanted the whales to do the work. We wanted the whales to start the short squeeze. And then once the whales started the short squeeze, we came in and pushed the price up. So we actually came in here, got in about 8,000. And I already had an order from before from $8,040. So this just added to my size. And we scaled out here. And I actually turned around and then shorted it. So I came in long and then turned around and shorted it. So to make it real easy, let me just pull this up for you guys. Take a quick look. So right here's the trade breakdown. So we were long, and the issue is with ByBit, love it. This entry price is the average we had with the original buy at 8,040 and our new buy at 8,000 when it broke. So this is the average. So we entered, scaled out for almost $50. And then sold the rest at 96. And then this is when we turn around and shorted. So we turn around and shorted. And then we close it out for about $30 gain, $35 gain. So we took a lot of size on this because this was an A+ setup. It was a short squeeze. These things are amazing for us. And over history, these have been a quality setup for me because I'm a shorter by nature. So be able to flip it to their side made sense. So that's what we did this morning, and that was a big trade, and I shared that with our Ascend Trading group, and as always, Ascend Trading allows me to share that with other groups. So I shared that in one other Discord group that I was in, that that's the trade setting up, and in K-Dub's Crypto Zombie Telegram group, I shared it with those guys, because there's a lot of guys that are newer traders. So we at Ascend Trading are a little bit more veteran. As a group, we've been trading for almost 4 years as a group, but individually, all of us have been trading for different variations. Some guys are longer than I have, and I've been in this game for almost 24 years. So it's just a collection of minds, and having a group of like-minded traders helps you with your edge and gets your speed up on this. Because at the end of the day, this is a game, and you have to have an edge, and that's what trading lets us do: learn from each other and create that edge. So that's what we did. We turned around, shorted it back down, and we closed the trade. I'm notorious for not fading shorts. A lot of guys in the room will fade this down and take a lot more meat on this. Like, as you can see, this came back down almost $100. It would have been a huge return. But I already had a good return for what I wanted because of the size I took. So for me, it's two mindsets. It's, do I take smaller size and hold longer, or do I take bigger size and exit sooner? So first target, bang. Second target, bang. Done. So this was, as you can see from the two exits, a 2-target trade. First target, cleared. Second target, cleared. And then we closed it off and shorted it back down. And that was it. Now, we didn't top ticket, but we got pretty darn close to the top. As Modern Rock would say, top ticks aren't everything. And then it flowed, and this is where we closed out. Right here in this red candle, we were done. Right here in this red candle, we were done. And it was a possible reshort, but not going to the well a second time. And then it faded and bounced on support. And then we got to the cloud, rode the cloud. And then you can see bounce within the cloud is our channel, which is why I keep saying about these clouds are good areas. And then once it turned to a red, we were underneath the cloud, and the cloud pretty much has been resistance until we got above the cloud. Then it was support again, and we rode in the cloud until the cloud changed green, and then we dumped. And then we've been bleeding until we got back to the cloud area, and now the cloud is acting as a resistance, and then we break the cloud. So for me, I'm not a big one on fading, but you obviously could have faded this down. There was really no risk, because if you were taking half off where we covered at and then put your stop at the high of day, or just be up just in front of the high of day, you never would have got triggered, you never would have got squeezed back out, and because you already had profit, you could have rode your profit. But that's not for me. Not with the size I took. And here we are now. Let's bring it all the way full circle. So we grabbed this as I was setting it up at 78.80. And we closed this out at 8,004. It just didn't. Sorry, that's 79.04. You just didn't expect it to shoot up like that. I was just putting the order out as I was setting things up to go live, because I was going to do a full live trade. And she gone. But you can see the violence on this. And what this was a textbook over shorting. So as you can see this candle right here. This wick is right here. And because this wick gave us a bottom of 780.91, I knew that shorts would try and push this down further. So I put an order at 78.80 to try and catch them pushing it down further. But I didn't expect that would be a one and done. Did not expect it to be one and done. I expected it to be a couple more reds, and we could have built a position. But they shorted it down to break a new low, and then instantly hit the cover. And as I was explaining to one of the other guys, there's three things that a short would do is already being short, you take profit into that first wick down, which lets you to reshort that profit you took back into this double top. And it allows you, once you get close to the bottom, to try and fire a short off into it, and then you close out. Because your average is back up around here, when you close out, as long as you're not caught last, you'll still be profitable. And if you're lucky, which is what they were here, stop losses will get triggered, and sometimes it will dump even more for you. This happens a lot in the stock world. I got a question here from Chia. He's asking if I use conditions to set my target. No, I don't use conditions. The reason being is conditions can be gamed with, and then I also will pay a fee because it will market you in or out of your position. So I try as much as possible to actually physically be on the ask or on the bid. So I'm actually adding liquidity, and then ByBit will actually pay me. But yeah. So now we're back above the cloud. Key here is volume. And we're just basically going to watch this trade. So as we're watching the support line here that's being put in, you see my alert right here. I had it set up 7894.24 to alert me, so I'd be able to get that trade up on ByBit. But it just happened too quick. So here we got this trend line here. It's being respected right now off this break. And this kind of always what happens when we get a nice dump. We get a respected trend line coming back of an ascending triangle until it fails. So basically, if you get into a nice dump, you're going to have yourself a nice little ascending triangle ride back. And just be mindful of the angle of that. Literally, we're at the mercy right now of the whales and what the whales are going to do. So the goal for us is to live within, call it the whale wanking. So our goal is to live within it. We don't want to be the whale. We just want to ride its coattails. So when they push us near an area, we'll take size to get into it, but obviously don't want to be bigger size than the whales have been moving. So bear me here. So we're back on that trend line again. Now, if this trend line breaks, we have a cloud, and that will be our stop, which is the reason why we got out at 79.04, as you can see. So we got out at, and that's also the cloud stop, 79.04. So it's not rocket science what I do. I keep it real simple, real basic, and consistent. Because at the end of the day, consistency is the name of the game. That's what's going to make or break you. So another guy had asked me about all of the chart prices I watch. So there's this website called Crypto Watch Markets, and this is literally all of the crypto indexes, or not the indexes, but the actual crypto exchanges that deal with Bitcoin right now. So right now we're in the red. BISC is kind of an anomaly. It doesn't even have much volume, so I should really remove that, but I just don't even bother. And some of these exchanges are removed from CoinMarketCap because the volume is spoofy. It's like, but at the end of the day, you just have to know that if it doesn't have any volume over here, then you're really not going to count it. The ones that have volume, like BitMEX, are going to make more sense for you to follow and pay attention to. But this just lets me know that the change here is about $60. I flip it this way to $21. So we're in that range. And what we've been doing is we've been discussing an $8,000 price and movements of $200 either side as your range. So 8,100, 8,200, and then we're talking about putting a bonus of 8,250 outside. So how this would work would be, if you're above 8,000, you've entered a position, then you're looking for an 8,100 to sell half and 8,200 to sell all, and then start a short 8,200 and add to your short 8,250 with the mindset that now you're going to come back down to 8,000. On the other side, if you're shorting under 8,000 as it comes up, once it hits 8,000, you want to be short your full size. As it comes down, you're looking for 7,900 to cover half, 7,800 to cover the rest of it, and then a 7,750 to start going long. Another when you add on your dip, and that lets you trade that range. Well, what we've noticed is that this range has gotten tighter and tighter and tighter, and now we're talking like $100 to $125 for a range on either side of 8,000, which is why today we only tapped just barely over 8,100. So that's just something to keep in mind. And there's no definitive, this is end all be all. Everything in the group are indicators. So what works for me may not work for someone else. But what we have noticed is that this $125 range on either side of 8,000 is pretty much what you're getting right now. Which means if you're a trader, you're going to be trading in those ranges, and you can do some good trades. Like we call them scalps because the amount of time you could be in a trade could be shorter, and the range of the movement is going to be smaller. So as you're scalping, I take a little bit more size than I normally would. But at the same time, too, I'm not going to be over leveraged because it's a tighter range. So right here, we're almost breaking above this reclaim area. I think it's roughly 79.15. So we'll say 79.17, which is this trend line right here. Once we touch that trend line, we should start squeezing back up. But what is always key is volume. And as you can see, volume is not the best. And it's, for me personally, it's just hard to trade and teach, which is why most people that I know that do teach and educate, that's their business. They don't really trade anymore. It's very, very hard to do both, unless you're doing after hours teaching. But for me, I have an indicator. My indicator is called the Three Musk Cloud. Really, what that short is for the Three Musketeers, all for one and one for all. And as you always know, that there's actually 4 Musketeers. It wasn't just 3. And that's what is part of my indicators. And then I have the cloud also tied into that. And what this does for me is it alerts me on possible pivot point areas. So when a pivot point shows up like this one right here, I know that there's a possibility for a trend change. And I have a possibility to take a trade. I might take it. And I'd work from pivot to pivot. So this pivot here changed. And this to me is a more significant one. So if I've got a green, if I've got a red, there's a possible long coming up. But it will trade sideways. But once it goes green, I'm good to short. I know for most people, they'll be thinking, oh, wait, that doesn't make sense. Why is green shorting? I'm a short bias trader. So this is set up for me for the stock market. So that's why it's set up this way. It's set up for me for the stock market because I'm going to short more than I'm going to go long in the stock market. So that gave me that green. It's a green light to short next red. And that's it. And this hammer is basically a cover point. So it's very basic because this is beneath here. You would cover. And then it shoots back up. So now we've got a green here. If I had bought anywhere, I'm exiting my long position. Why? Because there's a trend change. It's a green light to short again. So, as you can see, it shorts, comes in. We've got a red, stop, don't trade, don't trade. And I wait for another green light to come. Now, we're watching this about 13 million contracts on ByBit right now at $7,909. And we're getting some spoofy asks above that. So we know that there's people trying to get this price to go down on that particular exchange. And if it does do that, oh, we're getting a green flasher. It's going green. So we've got a green warning. Next red would be next red candle would be a short. So if you took this long on any of these reds, you'd be closing your long position and preparing to either a short, so you'd be building your short position now to get in a little bit early, and then putting it out on the ask. And there you go, guys. So if you stayed all the way to the end, you got the secret of my indicator. It's these pivot points that give you a chance to change the trend. And you wait for confirmation of the next candle after that. You guys have any questions? See, spoofies came out to play. And then there's 2.6 million on 79.11 on ByBit. It would be great to get a squeeze all the way to 79.17 so you guys can see that while we're still going live on the stream. And just to sum it all up, guys, there is no one be-all, end-all indicator. Everything together is what is your indicator. As you can see, we're still on that trend. Still on that trend line. And the question a lot of people ask me is Bitcoin going to go up from here? Well, it depends when you're asking that question and when they're on the chart. From a low of day, is Bitcoin going to go up from here? So I'd say 9% chance. It's just holding that trend line right now. Now the question is, once we touch that, it's actually come down a little bit now. It's 79.15. Once we touch that line, are we going to break through, or are we going to get rejected and come back down? If I had a crystal ball, then I'd be able to know exactly what's doing, and I would obviously bet the farm. But you don't know what's going on, because at the same time too, because there's two sides to every trade, guys, and ByBit is so freakingly transparent on this, is that when you go into a trade, there is a buyer and there is a seller, and sometimes, as it is right now, you're going to have buyers pushing the price up. You're also going to have shorts pushing the price up because they want to get filled on the way up, which works until they come to a resistance point, which would be that 79.15. If this doesn't stop there, then they got to cover themselves as it goes higher. So it's freakingly transparent as you got counterparties on this. One of the guys I trade with, Alex Kim's, is talking about the higher lows. He's right. This is nice ascending on Bitcoin. So you got the counterparties, and what these counterparties are going to do is they're going to trade between each other. And why this is so freakingly transparent, it's because when you look at the funding, sometimes the longs are getting paid for holding the position, and sometimes the shorts are getting paid for holding the position. That funding comes from each other. So that's why I really, really, really like ByBit. It is so freakingly transparent. Their market system and how they run your margin is freakingly transparent, and I love this mark. This mark price that they use, I love how they calculate it. It's just so freaking smart. It prevents all those BitMax whiplash markets that you were getting. So it's for me, it's a much, and I use the word loosely when I say safer, because you're trading crypto. Nothing's safe in crypto. Oh, we're getting the red candle here, folks. That's our first red candle. Yeah, someone's building a short position on this right now. So if you're long on this right now, I would take some profit before this turns around on you, because this is a green cloud, and remember, vice versa for me. Green clouds, green means go, and go means short. Presenting us with a pivot here. A red pivot. So again, if you're long on this Bitcoin right now, you should be looking to exit your position. Not investment advice, of course. Just what I would be doing. And wait for this to break. It's actually come down even more. It's 79. No, it's still 79.15. So basically $2 away. So someone does not want it to hit there because, like I said, a lot of people will be coming in to buy. So routinely they'll set up their walls about $1, $1.50 away. And it does two things. It means that those that want to get out will be adding to their position to help them put that wall there. And it gives a little bit of comfort room to absorb some more shorts if it does spike, without being completely underwater at such a low price. So I got a trader here who says that he's upside down on a long. See if I can get over there and help him on this. But first, we're gonna watch this short play out. They're just trading those ranges, guys. Back and forth. That's that spoofiness now. Because he wants it to go higher to fill that position. There we go. Now the shorts are getting filled. Now this is the crucial point. While the shorts are filling, it's all hunky-dory, it's all fun and games. But if this blasts over top of these shorts, we call it getting run over, it's going to come crashing back down. But that's how you fill a short. Is shorts who want to get in, try and squeeze shorts who are already in to cover. And when they cover, they're filling your shorts that you need to go short. So we got a double top now. See me big move next few days. We're waiting to trade this. Let's have a day job. I can't day trade. Guys asking if it's gonna dump. I'm like, well, this is a short right now. It hasn't dumped in a while. It's always been within ranges. So that's the short. Now the question is, do we get all the way through all these EMAs right here and slice? Slice this green cloud. This green cloud has not been much support anywhere going back on the time frames. And as always, key is volume. So how we know shorts coming? Well, it comes up towards a resistance, which is what we planned out. You've got the overselling, the low volume. You got the cloud. All these things combined together are the reason why this is a short. But unlike the short squeeze we had this morning and the short, is we don't have a lot of buying in here to really reflect an explosive move up or down. It's been kind of flat in here. So let's go back, shrink this up a little bit so we can see that trend. We're now starting to break underneath that trend line. The trend line's caught in the top. Let me get this here. Draw this out for you guys. So you guys can see that trend line. So that's the trend line. Bounce, 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 broke under. Now it's acting as resistance. So there are two things now, because the other reason why you come into this in short is there has to be a pullback. I shouldn't say there has to be a pullback. There should always be a pullback for the next leg up. So when you get into a double top situation, as you have right here, that's now outlined by the trend line, which I've put there for you guys so some of you guys can see it. The short is that pullback that's happening into the support levels where people will dip by. And if they do dip by this with enough force as shorts are covering, there's a possibility for this to take the next leg up on a short squeeze. Which is why you have to be mindful of the areas that you're shorting at and the size you are using. Because if you were to come in and take this short right now with anything over 200,000 contracts, you're probably going to end up getting squeezed before you get out. Reason being is that you roughly have, on the first 4 orders, about 2.4 million. So you're already at 10% of the total first 4 orders levels. So late night trading gives you some wilder moves, but at the same time, you have less volume to deal with, which is why the whale wankers love it. But at the end of the day, it's not smooth trading. So right now we're touching the EMA, nice little ribbon right here. And this is real simple. Are these going to support? If they support and this goes back up here, short is closed. Don't even. There's no point even waiting for it to go back up here. If it just clears this candle here, close the short, and then keep the little bit of tiny profit you have. And then wait for this setup to happen again and step into it again. And if you keep closing it and keeping that little bit of profit you have, then you keep adding to your buy power and your risk portfolio for it, because you can now use that profit that you have as your risk. And what will happen is eventually, as you keep doing this, you'll learn exactly the amount of volume that you need for this to crack, and then you can scale in your size because you'll know exactly what's going to happen. Because when it does dump, the question is it going to crack the clouds with enough force to cover you, or are there going to be too many shorts trying to cover? That's why you have to be mindful of the size you're using as this begins to roll over. And the thing about this is, like, all these, and why I specifically do this, all this is free. TradingView gives this all to you free. My little tweak I made myself. Don't sell it. So, slowly starting to roll over as we're cracking the EMAs. And as I was saying, like, all these are free. Like, My 3 Must Cloud is something that I've tweaked, but it didn't cost me anything to tweak it. I just put my experience in it. I don't share it other than allowing you guys to view it. I won't sell it. And this is Crypto VN Trend. I didn't create this. Someone else created this. So the combination of this and is the basis of what I use to trade. Yeah, trader. That's why I created the 3 Must Cloud myself, so I can put more into one, because it only lets you add 3 indicators. But that's how you get around it. And I did that to prove to people that you don't have to actually pay for anything. Okay, so let's be... Remember, guys, we covered our long at 79.04. So 79.04 would be a cover area for some of this short. And this is just simple range trading, what we're doing right now. We're just trading the ranges. It's pretty boring. It's not glamorous. But to be quite honest with you, if you're good at this, you will make more money than winning on these big moves to happen, because you can keep doing this and then you won't miss a big move because you're already in the trade. Like if this was to dump all the way down to like that magic 6,000 people keep talking about, what is not going to happen, you would already be in this trade. And you would cover half of your trade at this first target, or a third at this first target, and you let the rest of the trade ride. Yeah, dollar bill, Bitcoin futures. Now we're underneath all of this EMA ribbon. Now it's the cloud. Is this cloud going to support it? So depending on size, what I would do is just before cloud touch, cover a quarter of that position. And then I wouldn't let it go back over the EMAs. I'd cover the rest. And then I'd cover here. And then just start scaling out. Like once you're already ahead of the game, you just start scaling out. So once I get that initial 25% covered, then I know that, okay, I can just scale another 25% of what I've got left. So there's ways you can do it. You can divide your, let's say you've got 100,000. You could break it up into 25,000s and scale it that way. Or you can scale out 25%, which would be your 25,000 at first, and then another 25% of what's your 75,000 left, which off top of my head, trying to do the math, be about 18,000. And then again, scale out, scale out, scale out. You can keep doing that as you're going down. until it turns back around on you. But as you see, this little bounce right here we're getting in that cloud area, it's people covering as they come up into the cloud. But that's why I get out that little bit of, that little 25%er just before that. Lock that in. And if you keep locking in those trades, then first off, you got to make sure you got the range on the trade to be worth to take the trade. And then if you can lock that in, it allows you to use your leverage correctly. So I'm being asked right now, how do I avoid getting killed on fees? So is this spiking back up right now, guys? See? That's why you take that 25%. We'll now let it go back over the EMAs. And we're out. Now we're coming back into this area right here for short, 79.30. It's a possible short area. For me, I'm not going to touch it because we're looking at the 1 minute right now, but on the 5 minute, we're into the cloud. 79.28.50 is the cloud. And we're through the cloud. We're through the cloud top on the 5 minute. And it's a red cloud, right? So the longer the time frame, the stronger the trend's going to be. So just remember that the longer the time frame, the trend's going to be. As you can see, there was a pivot too. I didn't have it on because I had that draw until still up. But there was a pivot right here before the cloud. As I was saying that we should be covering at least that 25% here. And then I said I wouldn't let it go back over the EMAs. So I'm out in here. And then it just, woof. And it's not on much volume, guys. It's just late night trading. There's not much volume. And they can do this. So right now we're talking about contracts and the maker-taker fee that ByBit has. So how this sets up is on 100,000 contracts, you roughly are going to get paid $25 if you're on the ask or the bid, adding liquidity. If you're someone that markets in or markets out, which means your order is filled instantly, that can either by setting your limit lower than what is out there or above what's out there to get you into the trade instantly, then you're going to pay what's called a taker fee because you're taking liquidity from the market. And that would be $75 on 100,000 contracts. So just breaking it down for some guys, how that works here. So, and as we warned, guys, like when you're shorting this pullback, which is why I keep telling people take that 25% at that first target, because that's a turnaround point. And what this is a bull flag, and this is why it's a bull flag, because you have your shot up, you have your accumulation as it's coming back down, and when they reach the point, it's bullish again. So now we're going to flag out again and start to come back down, and we'll see. But for me, this is not a reshort. I would not be reshorting this because now on the 5-minute we're above the cloud. So for me, I got to let this churn for a bit. On the 5-minute, that candle took off was 1.6 million. And now we're at half that in this other one, so we should be going up again. It's all about volume, guys. So 1.6 million, and as I said, we were at 800,000. We're above that. We're just under a million now in the second 5-minute candle, and we're going up again. $79.40. If we scroll this one all the way back here, $79.40 right here. This is the bottom of this. So it should be a resistance area. The question is it going to be strong resistance or weak? Now, some guys have on the chart that VPR, which will show the buying area. And I would love to add it to my charts, but for me, that just clouds things up too much because of what I use for my charting. So I don't use that. But I can tell right now that the volume was not very much on these touches. So it could break through. And then the other thing too, with it spiking this way, we don't really have any shorts sitting at that level. So it should rip through it. 70.40. There we go, ripping through it, guys. It's going higher still. Okay, we got a trend change. Trend change indicator has come up. So that would be your short. So if we extend this trend change back out, look at that. See how beautiful that, and how that respected the trend? So I've got a trend change indicator here on our shooting star. Now we're back underneath this trend line. So if you're long, I would exit that. When the guy said the top of the chart was cut off, so I'm going to focus more on the chart. And then this is it. This is the range that you would love to have been short into. Almost to the T, guys, as we said, 79.40 would be right area to short. To a T, they got filled. And that's what will happen sometimes is you got shorts recovering. We're going to squeeze other shorts up to get a better position to short. A lot of this is shorts getting squeezed. Like it's not, you can tell from how violent the spikes are that it's not always longs coming in size. It's usually shorts getting trapped because they'll put those spoofy bids up of like 1.8 million or 1.9 million on the ask. Ain't no one buying 1.8 million. There's been no 1.8 million candles, period. But you know what happens when a 1.8 million candle does hit? You get short squeezed. So that's how you can tell there's some spoofy bids that are going out there, some spoofy asks that are going out there, is that they just don't make sense for the size that's been trading, that's going through. Someone's trying to force other people to game it. That's why I said earlier, when I told guys about the trade that we were doing, was I told them to set up your PVRs so you can actually see the patterns that's happening with the trade. So this was the tweet that we did this morning when we talked about it. So set your PVRs to watch the Bitcoin action on right now. New traders or old, this battle tonight between whales is going to be solid educational material. Over the high of the 24-hour period is a short squeeze on volume. Let the whales work, AK break. And then we have possible 8,170 to 8,240 on the break. And that's what I said. That's what we did it out. So we were watching the high of the day, and that all worked out perfectly for us. And then that's the trade that we took. It's my actual trade there. So it's still coming back down. So it's bouncing on this EMA right now. So this 79.30, 79.40 is an area that we've been in multiple times over the last week or so. It's been part of our ranges. So, see it keeps on playing it. This is why I'm a very, very big proponent of you take that 25% and pay yourself. It's real simple. Just look back. Like, how would you have known to cover some there? Well, 1, 2, 3, 4. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4. It's never been more than 4 red candles. 1, 2, 3, 4. It just makes sense. Cover some of that, get that 25% out, and then you'd wait for this to come back down to the cloud, cover another 25% or so of what you got left, and then see if it breaks the cloud. And if it breaks the cloud, you've already paid yourself to the point that you're not going to go back and have this winning trade be a loser on you. You've paid yourself some profit for being right and being patient on the trade. And then if it does break through the cloud and it drops all the way down, you're into this, so you can just scale out. So that's why I'm a big proponent of always taking that first 25%. And now we got those spoofy asks back up again. They're gonna see if they can crack this cloud. So what you don't see here is you see the EMA, but this here actually, this line right here actually represents the 5-minute cloud. So it bounced off the cloud. And they're gonna put the spoofy ask to try to force this back down, showing an overselling on it. And we'll see if they can get this to bleed out. We're into the cloud now on the 5-minute. If we exit this cloud on the 5-minute, we should get a cloud touch on the 1-minute. So that's what we're watching right now. Trader's asking about setting an order on ByBit and also set a take profit when I create the order. Starting to get a trend change showing up again. Oh yeah, she gonna dump. This keeps up. So just letting them know that when you set an order on ByBit, a window pops up and you have an order confirmation at the top. You can set a stop loss, profit taker. So just bear with me a second, guys, as I get him sorted out. Back to 7930 again. So basically, what this trader's trying to do is set up a conditional order. Because what they want to do is, how can I set an order on ByBit and also take profit when I create the order? So when you create the order, you click on it. That's what it gives, that little window that I popped up, where you actually set your profit and your stop loss. Once you're already in the trade, though, you now got to go to limit and use the limit on the tab that says position size. Boop, 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 boop. There we go again. Look at that. So what he wants to do is he wants to turn around and swing this short. If the bottom falls out, he wants to close his long position and go short. So the easiest way to do that is to set up a conditional short that's going to have the amount that you want short plus the amount to close out your trade. But remembering that conditional orders are market orders and you will pay a taker fee. And there we go, guys. Cloud touch right now. So a little trend change indicator. So if you're long, you would exit it. And now you're back here, touching on the cloud. At the same time, too, we're in the 5-minute cloud. So next candle makes a decision. See which one's stronger. Is it the 1 minute or is it the 5 minute? Because on the 5 minute, we should have another red candle, which would put the 1 minute into the cloud. And if we go into the cloud, it's routinely dumped on green clouds. There we go. 1 minute was supported. It's kind of weird because of the angle on it. But the question is, if the price is above the cloud, but the cloud is red, does it still make the price bullish? What's the relationship between the cloud color and the price trend? Well, red usually means it's bearish. Red is usually a sign it's going to sell off. But the way I use it is just for support and resistance, just like an EMA or an SMA. Just as another area of support resistance. So as you can see right there, still the cloud bottom supported it. We didn't dump the cloud bottom, but the cloud top rejected it. So we're still within this cloud channel. Basically like a $5 range right now until this cloud breaks. And predominantly green clouds have broken. You could say it did break right here, but predominantly green clouds have broken and have dumped for us bigly. It's not often their support like this one here was a support. Most times they've dumped bigly. There we go, guys. Cloud dumped. This is my green indicator. Remember, for me, I'm backwards because I'm a short bias stock trader. So my green indicator, short, but we already were short on this. And there you go. So you would have covered your first 25% on the cloud test area. Then, because it broke, you'd cover another 25%. And literally right now, you're in the driver's seat. Market can do what it wants, and this trade should not turn back on you because you're ahead. That being said, if you took huge size because you're greedy, you're not going to be able to close that size. But if you took a moderate 100,000 shares or so, you're good. You want this trade shouldn't turn back into a losing trade on you. Again, not investment advice. This is just what I'm doing. Just I'm saying too, if you guys like me to do more of these live trades and ask me anything setups, just like and subscribe. That way when I do it, you guys will get notified. And once I close this short, I'm gonna call it a night. Quick U-turn there on the 1 minute and back outside on the 5. Back outside the cloud. And I've closed that position because I would never let that get back over the EMAs. Just remember that rule, guys. Like, once you take your first profit, take your second, don't let it get back over the EMAs.